All right, let's go back in time for a second. The year is 1998. The internet is the hottest thing on the planet, and it feels like everyone with a brokerage account has found the secret to getting rich. You pour your money into tech stocks, and for a couple of years, you feel like an absolute genius. And then, the clock strikes midnight on the year 2000. What happened next was a collapse of epic proportions. I mean, a total, shocking freefall in the market. People who thought they were millionaires lost everything, and it felt like it happened overnight. By the time the dust settled, only about half of those dot-com companies were even still around.
And this is the one that really tells the story. When that bubble finally popped, the tech-heavy NASDAQ index just cratered. It dropped by a staggering 80%, a total and complete wipeout. So why am I bringing up this painful piece of history? Well, because that same feeling, it's back. Only this time, it's not the internet. It's all about AI.
You know, this quote from the legendary investor John Templeton just keeps popping into my head. Everyone is saying AI is different, that it's a revolution, a once-in-a-generation shift. And hey, maybe it is. But it really forces you to ask the question, is this time really, truly different? So to really get what's happening right now, you got to look at these 7 companies. They've been nicknamed the Magnificent Seven. And let's be real, they basically control the entire stock market at this point. We're talking about the big ones: Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and of course the star of the show, NVIDIA.
And check this out. This is what's so wild. Just those 7 companies make up a massive 36% of the entire S&P 500. Think about that. It means that even if you're just passively investing in a simple index fund, you have a huge chunk of your money riding on these tech giants winning this incredibly high-stakes AI race.
And when I say high-stakes race, I mean a flat-out spending spree. They are pouring an almost unbelievable amount of cash into this to win. So brace yourself for the numbers we're about to see. In just a single year, these companies are projected to spend a combined $330 billion on AI. To put that in perspective for you, that's more than the entire GDP of countries like Finland or Portugal. All of it just being funneled into building out this AI future.
And you think that's a lot? It's not slowing down. As you can see here, by 2026, global spending is expected to blow past $500 billion. This insane spending is basically what's keeping the whole economy humming right now. But it brings up a very important question.
Which brings us to, honestly, the most worrying part of this whole boom. There's this strange kind of circular way money is flowing around that's making it really hard to tell what's real growth and what's just, well, hype.
So you gotta ask, right? Where is all this cash actually coming from? Because when you start to follow the money, you find this thing that some people are calling the AI money machine. And it's a huge reason why some folks are getting pretty nervous about how healthy this whole AI rally really is. So here's how this crazy loop works. It starts with investors pumping billions into, let's say, Microsoft and its partner OpenAI. Then OpenAI immediately pays a huge chunk of that money right back to Microsoft to use their cloud and their data centers. Microsoft then takes that money and uses it to buy tons of AI chips from NVIDIA, and then, to close the loop, NVIDIA turns around and invests some of its profits back into, you guessed it, OpenAI. Every step of the way, someone books revenue, and the stock prices just keep climbing. There's actually a really simple way to think about this. Imagine I pay you $1,000 to dig a big hole in my backyard. Then you turn around and pay me $1,000 to fill that same hole back in. On paper, we both just made $1,000 in revenue, right? But did we actually create anything of value? That's the big worry with this AI money machine. And who's sitting right in the middle of all this? Kind of like a spider in a web? NVIDIA. They're selling the essential tools, the shovels, if you will, to absolutely everyone. Microsoft, Meta, Google, you name it. And then they're taking their profits and investing back into their own biggest customers. It's a brilliant business model, and it's why their stock has just exploded by over 1,600%. So all of this whole complicated dance, it all boils down to one giant multi-trillion-dollar question. With all this money just moving in a circle, are these AI companies actually making enough real profit from real outside customers to justify these mind-boggling stock prices? But wait, there's more. That whole money machine thing, it's not even the only problem on the horizon. There's another, maybe even bigger challenge that the entire AI industry is about to face. A shortage of the one thing it can't live without. I mean, first off, let's just be real. The progress we've seen is insane. It feels like just yesterday we were all laughing at those messed up AI pictures of Will Smith eating spaghetti.
And now we're looking at AI generating video that looks almost completely real. This incredible pace of improvement is the engine driving this entire market rally.
But, and this is a huge but, there's a catch. To keep getting better, AI needs data. And not just any data, it needs massive, massive amounts of it. And as this chart shows, we are about to hit a wall. Projections are showing that by 2027, AI models will have basically read and processed all the high-quality human-made stuff on the entire internet. We're about to run out of fuel. Think of it like a game of snakes and ladders. For the last few years, AI has just been shooting up this giant ladder, powered by all of human knowledge. But we're about to run out of rungs on that ladder. And if these companies can't find a new source of data and fast, all that incredible progress could just slow to a crawl. And if that happens, those sky-high investor expectations could come crashing right back down to earth.
All right, so a circular money machine, a coming data wall. It sounds pretty scary, I get it. But this is not the time to panic. It's about understanding the situation and being prepared. So let's shift gears and talk about a clear, actionable game plan for how to handle all this uncertainty.
Now, first things first, let's get something straight. This is not just a carbon copy of the dot-com bubble. The huge difference, as you can see here, is that today's AI companies have actual products that people find incredibly useful. Millions of us use ChatGPT every single week. The issue isn't that they don't have a product, it's whether their profits can ever justify these gigantic valuations.
So what's the final verdict? Well, look, the signs are all there. We've got insane valuations, we've got questionable revenue, we've got everybody scrambling to get a piece of the action. Yeah, we are almost certainly in an AI bubble. But, and this is the most important part, that does not mean you should sell everything you own and run for the hills.
No, the smart move here is to fall back on 3 classic, battle-tested strategies. Number 1, keep investing consistently. Just automate it. Set up a monthly investment into a broad, cheap index fund. That way you automatically buy more when things are cheap. Number 2, focus on growing your income. The more cash you have, the more you can take advantage when markets dip. And number 3, the most important one of all, diversify your assets.
You've heard it a million times, but it's true. Putting all your money in one basket is just asking for trouble. Real diversification means spreading your money across different kinds of things that don't all go up or down at the same time. This is your absolute best defense against any one part of the market completely blowing up.
And that brings us to the final question. Look, if this bubble does pop, it isn't the end of the world. For people who aren't prepared, sure, it's a moment of pure panic. But if you see what's happening and you have a solid plan in place, a market crash stops being a crisis and starts looking like an opportunity. The only real question left is, which person are you going to be?